Hi guys, in today's video I'm going to be discussing my opinion on the question, is buy-to-let dead here in the UK? Thanks for visiting my channel Free Your Finance. My name's Gary and I'm documenting my journey towards financial independence. I talk about investing, property and saving, so if this sounds like something you may be interested in, please click the subscribe button below. So I have spent literally hours researching for this video. I found out as much as I can to report back to you, along with what I've come across over the years, but as you can appreciate, I'm not a financial advisor or a property expert. So please do your own research too before making any decisions. As some of you may know, I have a handful of buy-to-let properties here in the UK. I'm often asked various questions by friends that are thinking of getting into buy-to-let investing, and it really got me thinking, would I buy another property right now? Short answer, no, I probably wouldn't, to be honest. However, does this mean that the buy-to-let market is dead? No, of course it's not dead, but it's nowhere near what it was even when I started just 11 years ago. The barrier to entry was much easier then, and there are far more rules and regulations in place now, which I believe are making it much harder to become a landlord. At this point, I must add, I'm all for regulations making sure that tenants get a fair deal. However, in the last few years, it almost feels like as a landlord, I've become the enemy. According to Hargreaves Lansdown, in a recent survey of 19,000 landlords, 17% said they were likely to sell up this year. 56% said they weren't confident the property will provide adequate returns over the next 10 years. Now, you must take this research with a bit of a pinch of salt, as of course it's in their interest to give figures like this, as they're hoping you'll invest with them instead. However, within the various landlord groups that I'm in, there are a lot more posts coming up about people now deciding to sell their property and get out of the market. The one thing I would say is if this research is true, then surely this is going to lead to a greater demand in rental property. Definitely something worth considering. Later in this video, I'm going to be discussing some of the things that have made it much harder to be a small investor in property like me. If you're considering buying your first buy-to-let property, I'd highly recommend you watch right through to the end of the video, as I think you'll find some of these points really useful. Before discussing these new changes, I just want to confirm a few things. Of course, this subject is quite sensitive, as there will be many people that love buy-to-lets and have done extremely well from owning them. I want to sort of pre-answer any comments from pro-buy-to-let investors saying, Gary, you can make money. What about property through a limited company? What about an HMO? What about commercial buy-to-lets? I agree, all of these are really valid points and things worth considering. And just like all investing, there's so many arguments both pro and con. However, this video is simply sharing my personal belief. I believe now, more than ever, it needs to be treated as a business rather than just a small investment. A business that you need a fair amount of spare time to keep growing your portfolio, a strong knowledge of an ever-changing market, the right property, which may need work to get the return on your investment that you require, and also the correct location too. Currently, all of my properties are within an hour of London, and I've seen yields slowly dropping over the years, whilst property prices keep increasing greatly. Now, there still are great rental yields available here in the UK, especially as you start moving up north, with locations like Liverpool still boasting 10% plus. This depends on your risk to reward ratio. If, like me, you are based near London, would you be happy having a property 250 miles away and taking that very hands-off approach? So I'm now going to highlight some of the main changes that have been introduced since I become an investor, and things you will be faced with if you decide to buy your first rental property. Section 24. So this is probably the biggest one on my list, which really caused a bit of a stir in the buy-to-let market. It was introduced in the summer budget of 2015 by George Osborne, and it's going to affect the higher rate taxpayer the hardest. I was going to try and write this clearly using my own terms, and I decided why not just do a screen recording. So here's buyassociation.co.uk explaining what it means. So as you can see, before the changes come in, as a landlord you are able to deduct all of your mortgage interest costs as well as other allowable financial costs from your tax bill. Under this new Section 24 rule, this tax relief has been slowly reduced. This means that now as a landlord you will declare your rental income, pay income tax on the full amount, and then claim back 20% of your mortgage interest costs as a credit. Moving on to another website, back to Hargreaves Lansdown, they've provided this very useful chart. This is showing how changes have affected a high rate taxpayer who is also a property investor. These figures are based on a rental income of £750 and a mortgage interest payment of £300. The main thing for you to notice is the amount of tax has increased each year, which of course means their net income is ultimately reducing. This leaves a very little wiggle room in your profits for maintenance, other costs such as service charges, and even loss of rent during void periods. There are ways of getting around Section 24, the most popular one being to set up a limited company and to purchase a property through your company. Changes in stamp duty. I'm sure you're expecting to see this one mentioned. The increases in stamp duty for buy-to-let investors was introduced on the 1st of April 2016. Yes, I know everyone has to pay it, but as a buy-to-let investor you have to pay much more. Thanks to the website knightfrank.co.uk, they have this comparison table showing the difference with stamp duty between the standard rate and the second home or buy-to-let rate. For a £200,000 property, we would be paying no stamp duty under the standard rate. However, as a buy-to-let, we'll be paying £7,500 stamp duty, 3% on 125,000 of the value and 5% on the remaining 75,000. Wear and tear deduction. So if you'd offered your property furnished, you used to be able to claim 10% net of your rent each year. This was known as a wear and tear deduction, which you were allowed to take whether or not you'd done any work or not. As of the 6th of April 2016, this has now been completely removed. Electrical installation condition report. This testing has very recently been introduced. With any tenancy starting from the 1st of July 2020, you must have an EICR. This requirement is going to extend to all tenancies from the 1st of April 2021. It's not a huge one, but it's more cost to you. I haven't had to have a report done on one of my properties yet, but from a small amount of research, it looks like the cost is going to be anywhere from around £150 to £250, depending on your property size. Any problems that are brought up on that report have to be sorted within 28 days. This could be a big problem for any older properties that maybe they'll say need a full rewire or something. The standard EICR will last for 5 years before you then have to pay to get it renewed again. Selective licensing. So if any of you own a large HMO, a landlord licence is already mandatory. Selective licensing is something that has been introduced in a number of cities, meaning landlords have to apply for a licence if they wish to rent out their property. There have been some debate saying this should be rolled out nationwide. Again, from a very small amount of research, I've found costs of around £500 to £1,000 to apply for this licence. So please bear in mind this could be a potential cost that could be introduced in your city. Caps on deposits. It came into force from the 1st of June 2019, and you can now only take the maximum of 5 weeks rent as a deposit, providing the annual income of your rental property is less than £50,000. You can also now only take 1 week's rent as a holding deposit. Letting fees ban. I understand this one partly as it stops agents from overcharging, which I've experienced myself in the past. However, for honest landlords like me, it's a bit of a pain as it's now removed my right to charge the tenant for things like referencing and inventory checks. This is another cost that now needs to be covered by you as the landlord. Energy efficient rules. As of April 2020, landlords are required to make sure they have a minimum rating of E on their energy performance certificate. So these are just a few of the rules and regulations that have been brought in a relatively short space of time that I've been investing in the market. Again, I'm not saying that this has killed the buy-to-let market, but they are all certainly things that you're going to have to consider before buying a rental property. Some of these regulations are going to be great for tenants, and I hope that it helps to get rid of those rogue landlords that we all hear about. However, I would also argue a lot of them are reducing the profits of being a landlord, and are ultimately the reason why some people are now saying the buy-to-let market is dead here in the UK. Please leave your comments on this subject in the box below. Maybe you're doing really well from rental properties, maybe you're thinking of just buying one. Let me know where you're at in your rental investing journey. If you enjoyed the video, please don't forget to hit like. I know it seems so minor, but it really helps the channel grow. I regularly share videos on investing, property and savings, so if you'd like to see more content like this, please hit the subscribe button below. Hopefully I'll see you soon. Take care.